Well, the stock market rally stuttered unexpectedly on Wednesday, with all three major indexes falling, closing below Tuesday's session. The Dow fell 1.25% roughly, the S&P 500 roughly 1.5%, and the tech-heavy Nasdaq exactly 1.5% in declines. Citi encouraged investors to use this as an opportunity to buy the dip, with strategists writing in a note, the message is to expect pullbacks and buy into them. This is typically one of the tenors or the sentiments that prevails when you do have more of a market environment that has bulls running into some of even the more riskier assets out there, but really banking on what we've been talking about, especially coming off of the most recent Fed meeting, despite the dovish sentiment that we expected, or the hawkish sentiment that we expected to prevail, a little bit more dovish tenor prevailing there, pushing us into next year, and the market's looking on average about 6 months out, looking towards continued gains here, and ultimately that buy on the dip sentiment once again rearing its head.
Yeah, and you can see the losses across the board here, at least when you take a look at the performance that we saw yesterday. S&P, NASDAQ 100, Russell 2000, among those major averages there, indexes to pull back. We are seeing this so much optimism in the market. And one of the things that we have talked to as strategists, investors about time and time again over the last several weeks, Brad, is whether or not this optimism is warranted, especially when you take into account how optimistic the market is, investors are about the Fed rate cuts next year versus what the dot plot is signaling. There is still this discrepancy in terms of expected rate cuts looking ahead to next year. And Citi making the point that they do see more volatility. They do see the risk of more of these types of pullbacks like what we saw yesterday, given the fact that we are still in this overbought territory. 19 of 24 industry groups, according to Citi, are at or near overbought ratings currently. So the message very clear to expect more pullbacks, but again, it's an opportunity for investors to buy into them and hold it for the long run.
Yeah, and more breadth coming is what we've continued to hear going into next year. And one area that some of the strategists and chief investment officers have been talking to us about is specifically small caps as well here, and that is continuing to catch a bid here. So it's going to be interesting to see, especially if you're kind of layering on a profitability filter, as we were discussing yesterday with one of our guests, on even some of those small cap names, as the Russell 2000 does not have that profitability filter. The S&P 600, Liz Ann Saunders of Charles Schwab has reminded us before, has that profitability filter. Be interesting to see if that breadth also pushes more people to consider small caps, even on some of the dips.
Yeah, and we're the strategist here expecting S&P to end next year at 5,100 in terms of where he's seeing the most opportunity. He likes technology, industrials, also recently raising banks to overweight amid some of those more attractive valuations.